Is using life insurance or using a traditional IRA better for your estate planning? Well, this is a very unique question that we're going to be talking about today and providing some insight on in our financial freedom video, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. So Carson, there are two powerful tools that are often in discussion when it comes to estate planning, and that's life insurance and IRAs. And today you'll help people understand both of them by comparing the two of which option might be best for them.
Yeah, and when you're talking about life insurance and traditional IRAs, Andrea, both of those particular products can be very valuable tools for estate planning. But when someone is trying to decide which is best for them, it always depends on their personal situation. And Andrea, I will always tell someone in this particular situation to consult with a financial advisor or an estate planning attorney to determine what option is going to be best for them. So today what I will do is compare and contrast these two products so you can see what may be better for you when it comes to estate planning. But before we do that, there are always two rules to retirement income that we like to give you. And Andrea, what are those two rules?
Well, rule number 1 is to never run out of money. And rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today to talk about IRAs and life insurance as it pertains to estate planning.
So Carson, before you get started with the comparison, could you explain briefly what an estate plan is?
Yeah, sure. An estate plan is really about the transferring of your assets, Andrea, to the loved ones after you're gone. And when we're talking about assets, we're talking about things like your home. It could be cars, it can be jewelry, cash. It could be your retirement plans, of course. And the main idea behind estate planning is to make sure that when these assets are being transferred, they're being transferred in a peaceful way and avoiding the expensive costs of probate. So now let's go ahead and transition to our teaching slides so we can really outline the differences between using a traditional IRA versus using a life insurance product for your estate planning. So let's first talk about how a traditional IRA could be used for estate planning. Now, when it comes to a traditional IRA is really a retirement account that allows individuals to save for retirement with tax deferred growth. And that's what's going to be important here. Now, they're usually designed for retirement savings, as I mentioned, but they can play a major role in estate planning. Let's first talk about the tax deferral part of a traditional IRA and how that could be important when it comes to estate planning. First of all, it's the growth potential that tax deferral offers because contributions to a traditional IRA are typically made with pre-tax dollars. This means that the investments in that IRA can, as I said, grow tax deferred over time. Now, if someone is trying to grow their estate for their beneficiaries, having money that is tax deferred can lead to significant growth over time because you're not paying the taxes on the growth every year. Now, with that being said, there would be future tax obligations to the beneficiaries when they take money out of the account. But that may not be such a big issue if your beneficiaries are in a lower tax bracket when this money is received. The second part of utilizing a traditional IRA for estate planning is that it can provide flexibility for the estate. Now, when you have an IRA, you can name beneficiaries directly on the IRA account. Now, upon your death, the IRA can pass directly to those beneficiaries and avoid the long and sometimes very expensive probate process. Because you have named beneficiaries and have avoided the probate process, it can allow for your estate to transfer easier and reduce legal costs as well. And the last thing that I want to point out when it comes to you utilizing a traditional IRA for estate planning is that it provides retirement income for you while you're alive. Now, as a certified financial planner, I understand how important it is for a traditional IRA to be utilized for supplemental income for my clients during their retirement years. Now, if you're able to utilize your traditional IRA for income properly, it'll help you manage your cash flow in retirement and allow you to leave other assets to your beneficiaries. Now, I want to transition to talk about how life insurance can be used for estate planning and how that will differ from a traditional IRA. Now, when it comes to life insurance, the primary benefit of it is that it provides liquidity for estate taxes. When you pass away, especially if you have a large estate, your estate might be subject to estate taxes, and those estate taxes could be substantial. Now, if your estate isn't liquid, what are the beneficiaries going to do? They may have to sell other assets to pay these estate taxes. If this is the case, this could end up being a compounding effect and end up creating additional taxes from the sale of those assets. A life insurance policy can come into play here to provide a tax-free payout to the estate to help cover these taxes. Of course, this would prevent the beneficiaries from having to sell the valuable assets that you may want to keep into your estate for generations and generations to come. Another very important aspect of utilizing life insurance for your estate is that it can help equalize the inheritance. Now, you, of course, could have multiple beneficiaries that you're leaving your assets to. When this is the case, life insurance can come into play to help equalize different types of assets that you may have in your estate that you want to leave behind. Let's say, for example, you have a business and you have 4 kids. Well, maybe not all the kids are really suitable to run that business, so you may leave that family business behind to the kid that you feel is more suitable, and you may want to leave other beneficiaries cash or investments. Well, a life insurance policy can provide some additional cash to help balance out the value of your estate. This, of course, could prevent disputes and make sure that everyone gets their fair share. And the last benefit that I want to cover for using life insurance as a estate planning tool is that it can cover your debts and final expenses. Now, when you pass away, you could leave behind a large mortgage, other loans, credit card debts, final funeral expenses. Well, life insurance, of course, could be utilized to help pay for all of those expenses. This, of course, can help reduce the burden on your beneficiaries by removing the debts and expenses that you've left behind. When this is the case, it will obviously help your estate be settled more smoothly and remove any additional stress and confusion that your beneficiaries may have.
All right, Carson. So, what's the moral of this video?
Yeah, the moral of this video is that both life insurance and traditional IRAs could be really valuable tools when it comes to estate planning, but the best plan is going to be the one that is tailored to your individual needs.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.